Well, it's earnings season and we have Syngene. That is on our radar. The stock doing well on reporting better than expected set of numbers for the second quarter, despite a high base of COVID-related drug sales in the corresponding quarter. The company's also maintained its guidance of high teens revenue growth. So we have with us the MD CEO, Jonathan Hunt, giving us the details of the numbers and the plan going forward, more importantly. Thanks a lot, Jonathan, for joining in. The first half of this year, revenues have grown in step with your guided band, 17%. The second quarter has grown at around 26%. What I wanted to understand is that, what is a sustainable growth rate for the next couple of quarters? Because CDMO is a lumpy business. And secondly, how much of your guidance has Zoetis in it factored? And next year Zoetis comes in, what can you, say in terms of increased revenue there?
Yeah, super. We're really happy with the first and second quarter. Good, solid first half of the year. The first quarter actually came in a little better than our internal expectations, and that prompted us to upgrade our guidance. Second quarter, pretty strong at 26% growth, and that really is in track with what we expect for the full year with high teens. In terms of Zoetis, nothing really in the revenue at the moment. That's very much a factor for next year. We're still going through that setup, the preparation phase, getting ready to start manufacturing Librela. We've still got the regulatory inspections to go through. We expect those between now and I think the beginning of the next financial year. And that puts us in a position to start manufacturing maybe as soon as the fourth quarter, but it becomes a revenue factor next year.
So and what would you factor in FY24, Jonathan, in terms of a revenue contribution? A rough number, you could give us a range as well for FY24. And also, if you could tell us, the rupee depreciation is clearly helping you, right? If you could tell us, what was the impact, say, in the past quarter? And in this projection that you're giving, what is the rupee assumption you're making?
Yeah, sure. I mean, a number of factors in there. So if you look at the rupee benefit, most of our industry, just about everything we price is in US dollars. So if you've seen the US dollar strengthen, that flow back into repatriating it into the rupees is a structural benefit for us. At the 26% growth in the second quarter, you could knock off 9% of that for currency impact. But that still leaves you with pretty healthy underlying growth on a constant currency basis. If you want to really get underneath the skin of it, if you take the currency off and you also take out the pandemic from the prior year, you get to a true underlying growth. It's more like 30%. So the pretty solid organic growth in our discovery services, development, and through into the manufacturing. The main engines of the business at the moment are really on the research side. So sort of 2/3 of our revenue comes out of the dedicated centers and the discovery services. They're seeing really buoyant market demand at the moment. And I'd really put that down to the structural shift of return to work in the US and Europe. Many of our clients are really now trying to catch up lost ground. Projects slowed during the pandemic. They're now back into their labs, back into their offices, and they're really pushing very hard to try and catch up. And I think that's created quite a buoyant market over the first half of the year for us.
Take that point. Thank you for, putting it clearly for us. 9% of the 26% revenue growth comes in on account of the currency depreciation. But if you strip off the base of COVID as well, the organic growth would be close to around 30%, which is not particularly too bad. But, Jonathan, just wanted to understand back on the Librela point itself, at what stage of approval or rollout is it at? I mean, you were expecting to roll it out in the US as well. US FDA audits are, when do you expect any sort of approval coming in? Could you give us a sense of when we're looking at, launching this in both Europe as well as US? And what could the rough revenue be in a product like this?
Yeah, sure. I'll probably won't give you the revenue guidance. We'll do that at the full year as we go into the next financial year on the impact. But to give you the steps that we need to go through. The product's already launched by Zoetis. It's doing super well in the marketplace around the world. They really have got a real piece of innovation there in their industry. The qualification for us is very much about us becoming a supply point as part of their supply chain. So they have their own internal manufacturing we then become their second engine. They're seeing such good market demand that they're really de-risking their supply chain with the partnership with us. So the qualification steps are really getting ready for that manufacturing, having all your plant qualified, getting the regulators both from the European Union and also from the US to come in. That should be happening in the second half of this year. The timeline is difficult to predict. It's as long as it takes the regulators to conclude their inspections and give us the feedback report. If you assume that those are successful, then we're into manufacturing as soon as the fourth quarter of this financial year, and that really then starts to ship and become a revenue driver from the very beginning of the next financial year, which is really the time I'll revisit sort of specific earnings and revenue guidance around that deal.
All right. A final couple of questions just before we let you go quickly. If you could tell us that, you've expanded your manufacturing agreements with BMS, there's Amgen, then Zoetis. Are there any more expansions on the cards in the near future? And 30% margin stays, right? Is there any upside risk to that?
I'd love to see that, but I think 30% is a pretty creditable margin. I expect a little bit, a few hundred basis points improvement in the second half of the year. We're coping well in general with things like, rising prices, inflation. We're managing to either absorb that or pass it through. So the margin position looks pretty good. On the clients, actually quite a lot of healthy demand from much smaller businesses, sort of biotech startups, those real innovation engines. That's an area that we've seen a structural shift for us over the last 3-4 years. So we're just as likely now to be doing partnership deals with very large global biopharma companies, the mega caps. We're also just as likely to be doing it with small venture funded startups, and that really balances the business out really very nicely.
All right, and I'm not gunning you down for a number for the next year, etc. But you're talking about more revenues coming in from smaller clients. You have the Zoetis, etc. Just directionally, FY24 in terms of growth over the previous year could be better than FY23. Is that something that you can say?
It's a could, as long as you're not gunning me down for a specific number. Yeah, it could be, and I think we've indicated that we're hopeful that we continue to see this building of momentum in the business. So a number north of this year's guidance is very possible next year.
Okay, all right, Jonathan, thanks so much for stopping by. Wishing you all the best for the second half of this year, and good speaking to you as always.